Let's start with the biggest news issue of the day. The House, the Senate, and we understand the President of the United States may well sign a bill backing the protests in Hong Kong. Is this a ratcheting up of the angst between the US and China?
Well, we'll see what's the final decision of the President will be, but of course any escalations is not going to be something that is going to be constructive for all these discussions, but at the end of the day, it's between the politicians to sort out how they want to address those issues.
We've got together a couple of times this year, and I suppose these levels of protests have been going on for a number of weeks. Has any money flowed out? Has there been any allocation of capital away from Hong Kong from any of the clients?
No, we haven't seen that yet. We saw clients and people, thinking about contingency planning, but to be honest, so far we haven't seen any outflows or major movements.
Asia's always been a very rich bed of net new money. It was at the end of the second quarter when you corrected me and you said, I've got a record in this quarter. Is Asia going to continue to lead the charge for net new money next year?
Well, look, if you look at net new money is a function of wealth creation. Wealth creation is a feature of Asia, China and the broader Asia. And I do believe that we're going to continue to see this pattern over the next few years. It's a secular development. So you have more and more people having access to financial services, creating wealth, and so net new money is a function of that.
I mean, Hong Kong, they expect the first recession since 2009. China, here we are in this world, which albeit is growing at 6%. But you've lived through a number of different cycles. What I want to get a sense, has there been any change in the business that you do from a growth level at 6.5%, 6.7% to here we are at nearly 6%? What's been the change to your business as China slows? Well,
one of the issues which has also changed is the base.
Okay.
So we are growing less in percentage, but of course, I would also argue that the size of the growth and the quality of the growth is different. So it was always clear that at that point in time, China and Asia in general would become a little bit more volatile in their pattern to growth. And this is what's happening right now. So I think it's good. So. It's a long-term story, and a mid-single-digit growth is a pretty good, growth pattern.
In terms of proclivity to take risk, this has been the great debate. The service that we talk about each quarter when we get together, we talk about the allocation to cash, and perhaps upping that allocation from the clients. As we look at 2020, I look at volatility across a whole series of metrics. Are we complacent about the risks going into 2020?
Well, I would argue that we have been complacent for a while in financial markets. If you look at the macroeconomic picture, if you look at the geopolitical picture in the last 2-3 years, it's been quite challenging. And despite that, markets and financial assets have been reaching all-time highs. So I don't see a lot of changes in that environment. We have been complacent. Markets have been complacent, but this is probably the outcome of low rates or negative rates. So in that sense, 2020 probably will be a little bit more of the same that we saw in the last few years. Of course, with all those issues being unresolved, the chances that one day or the other things are going to be out of sync is increasing.
And I suppose the Hong Kong protests, to a certain extent, along with Lebanon, along with Chile, etc., were all quite unexpected. So as you look into 2020, I got to ask you about the US election, because the consensus seems to be around Trump re-acceding to power. Could the US election be one of the disruptors of 2020?
We'll see. I mean, if you look back in history, and particularly on the last election, a year before the election, nobody could really determine the outcome. So I think it's way too early to dictate. I would say that probably, the historical indicator seems to say that the economy and the shape of the economy will play a role in the elections in 2020, and so we'll see how it's going to go.
A couple of different research papers came out on the risk from Elizabeth Warren acceding to power. I mean, she's running higher in the polls. Is that a real risk that we should think about, possibly hedge for, or is it just let's just see how it all pans out?
I mean, it's way too early to hedge and hedge how. I would say that, of course, we will need to see and evaluate what's the outcome of the elections. Way too early.
Let's talk about the business. Mr. Mustier, Euro stomping ground over at UniCredit. He says he prefers buybacks to deals. You're consistent with the message on buybacks. You're consistent on the message with dividends. So you in that camp very firmly for 2020, buybacks over doing a deal?
Well, no. I mean, look, it's a combination. You need to look at what is the best form to return capital to shareholders.
Yeah.
And of course, when stocks are trading below their book value or tangible book value, the tendency should be to favor share buyback. But when you look about growth, either you use capital that you don't return to shareholders for organic growth, or you may want to think about non-organic, but it's much more complex on that.
We caught up over a year ago in September in London, and part of that discourse was about growth. And I said to you, look, the market doubts the growth story and what you're delivering. What's the one biggest thing that you've done, or a number of biggest things that you've done that reconstitute the growth story for UBS?
Well, I think that we are positioned. If you look at UBS, we are centered towards our position as the leading wealth manager in the world, a leading asset gatherer in the world, and wealth creation is a secular trend. People will, and the need of individual investors, but also institutional investors to save money and invest money is a trend that plays very well to who we are. So we are extremely well positioned to capture growth in that sense.
Okay, so you've got all the chess pieces on the right position on the board. I suppose maybe the more exacting question is, are you the right scale? Do you think UBS is the right scale to take it forward?
Well, our position, look, we are the largest wealth manager in the world. Not only because of the size of the client's assets, 2.5 trillion of client's assets, but also the fact that we are a leader in the US. We are one of the leader in the US. We are a leader in Asia and Europe and Switzerland. Therefore, we are well positioned to capture this growth. So scale is eventually going to be an issue for many players, no matter how big you are.
But does that mean that you're not going to need to do a deal? Because that's what I've come to you 3-4 times this year, and the rumours in the market are, you're looking at this bank, you're looking at this asset manager. Are you going to need to do a deal to change the scale story?
We don't need to do a deal. But it's exactly like saying you're never going to do a deal, or you need to do a deal. I mean, the truth of the matter is that nobody can really in any industry today say that you are ruling out doing a deal. But we are not forced to do deals. We have a good strategy. Has been quite successful for the last few years, and we are well positioned to capture organic opportunities. Of course, if we have an opportunity to evaluate the non-organic options, we will. But it's not something that we are forced to do.
So you do a deal in Brazil recently. That's perhaps the most recent one that we've reported on. If I said to you, is that the style of you for the next year, rather than sort of trying to do a mega deal?
Well, look, those kind of initiatives like the one we have in Japan with Sumi Trust,
yes,
and Banco do Brasil in Brazil are a way to create scale and leverage each other's strengths. So with Banco do Brasil and Sumi Trust, we have very complementary capabilities, and the combination creates overnight a very compelling equity story for both shareholders. So you can go through traditional consolidation, you can go through this kind of collaboration in the client-facing activities, or, as I always mention, there are also scopes in our industry to create more synergies in the back end. And when I talk about KYC, AML, processes, payments, you see more and more opportunities also to cooperate between banks.
You've got to survey the landscape for risks coming towards you as well. So is consolidation in European banking a risk to your business, or is it just something that's going to happen as a matter of form, and you just move on with WM?
Well, it depends what kind of consolidation you will see. So,
well, what can you imagine?
Nobody can be complacent about any competitive development. So we would watch and evaluate if something's happened, but at this stage, is not it's not a top priority, I would say.
Look, the market speculates from time to time. The press speculate about your tenure. The most recent one is a Swiss-German report that you want to stay until 2021. Is that, I mean, you and I have now interviewed for 8 years. So is it reasonable to think that 2021 would be a time for you to think about moving on and handing over the baton?
So are you tired to interview me?
No, no. I get to come to Zurich every quarter. But it's a question for the market. You've achieved a huge amount. You've transformed the deal and you set the benchmark for the reinvention of WM.
Yeah.
When do you think is the right time for you to think about it?
Look, I said it in the past. I mean, enough has been said about succession.
Yes.
We said everything that has to be said, and I don't really want to comment on this topic.